Good afternoon, and welcome to the Voice of Wisdom. With over 60 years of experience as an investment banker, entrepreneur, investment analyst, and venture capitalist, Morty Davis is Wall Street and capitalism personified. The over 400 companies for which he has raised more than $3 billion over the years have created a countless number of jobs and exciting new products. Through the Voice of Wisdom, Mr. Davis explores, analyzes, and debates the most topical political and economic social issues facing our world today. Joining Mr. Davis today is Eli Renov, a partner at Beechwood Ventures and a managing partner with Ariely Capital in New York and Israel. Please join the conversation today by dialing 332-263-3300. That's 332-263-3300. And now, Mr. Davis.
Welcome again. Good to be back with you. And I'm delighted to have my brilliant grandson here join me today. He's a super venture capitalist. He invests in startup companies, and he's performed brilliantly, even better than I have.
I don't think that's possible.
Well, today instead of discussing all the problems of our society, the U.S. society and the world, abortion or guns or wars or anything, which are all very relevant and very exciting, but some people would rather find out how to make money and how to invest in the stock market. And it's very appropriate to talk about it at this time because we've had a major line, relative mini crash in the stock market over the last half year or so, and people's economic malaise. We had inflation and depression, or inflation and unemployment at the same time. So I want to give you ideas that really, it shouldn't be a half hour or an hour that I could spare right now. I should give you at least a year to cover all the possibilities and learning that I did, experiences that.
Well, I have a flight tomorrow, so that's where I'm going to end. I'm good till then.
Okay, so I invite you to ask any questions you like, and specifically about the current market and how to behave and how to invest. So I made tons of millions of dollars, thankfully, and I'm pretty much at my age at the end of all that I can perform, although I'm still working as hard as ever. And so I'll let the new generation, Eli Renov, take some of the time and tell you what he does. Eli?
Well, first of all, I'm very happy to be here. To have the opportunity to spend an hour with my grandfather is a true gift. And I tell everybody how hard you still work, because people always say, "Oh, you work so hard." I said, "Call my 2 a.m. He's going to pick up the phone." So, it's truly inspiring.
Well, I'm still young. I'm still only 93. So, when I get older, I'll slow down.
Then you'll slow down. God willing, until 120. The other thing is that usually, because I live in Israel and I fly back and forth. What do you always say? I travel to I travel to the U.S. What's the line?
Like a shuttle that I used to take to Boston and Washington. You come back and forth Monday and you're leaving Wednesday.
All right. As long as I'm home for the weekend.
Yeah.
So
the flight takes longer than the time you spend in this country, or vice versa.
Yeah, probably. So it's nice when this isn't at 1:30 in the morning for me. I try to, it's probably usually the middle of my workday, and I try to always listen in. So it's nice to do this at this hour. So a little bit about, what I focus on. We have a venture holding company. We do everything from tech transfer company, and we partner with universities, research centers, hospitals, and we'll help to do the tech transfer and commercialize intellectual property. We have an arm focused on innovation centers. So we'll partner with governments, municipalities, corporations in order to create innovation centers. That could be a boot camp, a pitch day. And generally the idea is, how do we help a specific region? As an example, we partnered with Ramana Negev Regional Council. It's the largest regional council in Israel, makes about 20% of the land. Everything there is focused on ag tech, desert tech, climate tech, and how do we bring innovation to that. You're very familiar with ShareNet, obviously one of our investments, which is a platform for family offices to collaborate, invest together in an institutional manner, registered broker dealer, and we've raised, thank God, hundreds of millions of dollars. And generally the idea is to be able to invest with like-minded families. And then we have a full service web development, business development arm. And again, how do we create and give services and create those synergies between everything that we're doing? Ultimately, to take an idea from IP and ideation and on a university level through one of our innovation centers and an accelerator, and accelerate their growth, and then hold their hands, bring them to a ShareNet, and then bring them, through to the markets. And we have partners that, are all, focused on taking those companies public and IPO and secondary markets. So really carrying them all the way through. That's us in a nutshell.
I'm really deriving a great deal of pride and joy from this grandson. He's a superstar because he's picked up where I left off. Because I took 400 companies, total startups or very early stage companies, and I did it for some of the most impressive people you ever want to know.
You've raised more than $3 billion for them, right?
$3 billion, right?
Amazing.
And for example, I found a new pharmaceutical biotech company, Jonah, the inventor of the who cured polio.
Salk.
Jonah Fork.
Salk. Right.
Jonah Salk, right. At this stage of my life, it's hard for me to remember all the names of all the people I've dealt with over the years. In the course of doing all these business, these deals, I must have met over 100,000 people, including the company's presidents, their important employees and partners, their lawyers, their
Not
accountants.
met, helped. That's the answer. Helped. Raised up. That's the
helped. Anyway, it's a great feeling because you create jobs. When I gave somebody money like American Telephone, at the same time I funded one company. There is $2 billion, and they didn't hire more people. They used much of the money to pay off employees to leave. So when I gave a guy, a founder of a company, a check, it wasn't a year later or even a month later. The very next day, they're out buying capital equipment to build the company. They're out hiring employees. So it's true capitalism what I did, because it produced products that people, those that succeeded particularly, it produced products that our consumers love, that you and I love, and it produced many jobs that were very rewarding. Some of the employees they hired early on got shares in the company as part of their employment. They made a lot of money. Everybody did well. That is when I hired the right, I called him jockey, the right guy.
So how'd you choose who to give that check to?
Well, I'll give you one example. There was a guy that came to me, Sherwin Seligson. He's built a great company, a second company in Philadelphia now. But the first company, he came to me, he said, I could call somebody in the middle of the field in Philadelphia, and he's from Philadelphia, outside of Philadelphia, and talk to them right from your office. That was before there were cell phones. And when I came home and told my wife about it, so she said, he told you that, but why didn't he demonstrate it for you? He really didn't have it at the time. But what provoked me, what convinced me to fund this guy, was he was telling me how hard he works, day and night, weekends, Saturday nights, and so much so that his wife told him, either you stop and spend more time with me and things that are important to me, or it's over between us. So I gave her a divorce.
We don't advocate for that.
I'm not advocating
now
that.
we're trying to do work-life balance, right?
No, but as Warren Buffett said, the people he backs are the ones that have total determination, and that was my view. You buy the jockey who's compulsive, neurotically driven to be successful. So the ones that I picked right, I try to pick right all the time, made me look like a hero. They said, wow, how did you figure out to fund this guy? He didn't have a background of success. And the ones that failed, and
were married.
You know, maybe they stayed married. But they made me look like a total idiot. So it's not me that it's whenever they give me credit, some of them call me and thank me how much I helped them in their lives, and it changed them completely. It raised them to a new level, and you can do it too. And I can't discuss everything about the stock market or investing in a short period like this, but I will give you some ideas. Or if you get my book, From Hard Knocks to Hot Stock, it's very autobiographical, and it gives you many of the ideas on how to invest in the stock market and how to when to buy and when to sell and what to buy. So if you tune in, I'll try to do more segments on this if you're interested. And people seem to be much more interested in discussing that than the Supreme Court or the all those esoteric things, that the policies of the government. And so I may continue in this on these issues.
Well, I certainly can. And I don't know if my opinion counts, but certainly I can vouch for the book. I love your book. I think it's amazing, and I think I learned a tremendous amount from it.
Your opinion counts more than anyone's, because I love you and I admire you. And if I wrote that book and you were the only one that bought it and felt so enriched by it, that would be more than enough for me. So the name of the book is From Hard Knocks to Hot Stocks. It's right here.
I tell people all the time to read your book, so you have my vote. That's for sure. Yeah. I certainly agree with you. I think
there's a picture of the book, and on the back cover, if you get it or you look at it, even if you stop at a bookstore, you'll see that I have endorsements from Larry King. Back. Good to be back with you.
It's a commercial break. That's all.
I funded a lot of technology companies that were very successful. But when it comes to handling technology, forget about it. That's not my forte.
The one from Silicon, that was Interdigital, right?
Yeah.
That had a 12. He's so modest. That had a $12 million valuation at the IPO. From their IDCC, it's $1.8 billion today. Probably hundreds of patents in the 5G space. You know, I don't hold the candle to Morty Davis.
The same guy who works those hours and everything started another company, OLED, and everybody now has it on their screens, the OLED screens, television and a computer. Anyway, I started to tell you a little bit about my book, From Hard Knocks to Hot Stocks. And the endorsements I got were from Larry King, who said, this is the best book I've ever read on making it big. On making it big. You're in the right hands of a master. Enjoy. So it might be challenging, but it's not really. It's not technical at all. So you will enjoy it. And then Donald Trump wrote, you might have heard of Donald Trump. Morty Davis has written a chronicle of great triumphs. He wrote it better than I'm saying it. It is full of
The light is hard here.
intriguing, but yeah, you read it to them.
It is full of intriguing speculation and clear insights, provocative, challenging, and enlightening, and written by a unique man who really knows the score. A must-read. I can't say it any better than him.
And then Senator Bob Dole wrote a recommendation to get it. The head of Bear Stearns, Greenberg, wrote a fabulous.
Father loves, learned from Ace. He was one of his mentors at Bear and ran a big fund there, and now chairs ShareNet. So certainly we see that passing of the torch for next generation, and thank God.
I don't know if you know this, Ellie, but before I titled it From Knocks to Hot Stocks, it was called Wives Give It Free, another something.
The stocks or the knocks? Which one? That's the question.
Wives give it free. Aggravation and all the other things you get from a wife. Anyway, wives
comes from a man whose wife was the greatest woman.
Wife, right, the greatest wife ever. You couldn't ask for anything better. But, it was great for me. For her, I don't know.
Okay, so you're batting 500.
Right.
What do you always say? That's a Hall of Fame career, right?
I always thought that we have a Hall of Fame marriage, because in baseball, if you get 3 out of 10 or 300, you go to the Hall of Fame. And I had a great marriage, and she had me. So we were 50-50, which is 500. Nobody ever hit 500 in baseball. So I said, we have a fabulous marriage, a Hall of Fame marriage. But seriously, the reason I called it Wives Give It Free, because I used to give lectures on the stock market. And I said, if you want to buy, what stocks to buy, just ask your wife what she's buying, or observe what your kids are buying, and you'll get all the winners, the biggest winners. And after that, I noticed each time that the product took off, it was the kids and their mothers that was the reason that it did so well. For example, McDonald's was so successful initially because the kids loved those hamburgers, and their mothers loved taking them for a quick bite, and it's continued one of the greatest companies ever. If you bought initially, you'd be very, very wealthy today. And I'll give you another example. Not so long ago, there was a company called Snapchat. She was a...
Well, yeah, the added advantage that it disappeared, right?
Pardon me? Yeah.
You were saying that...
Yeah, so then, it was quickly adopted by these young women. So this young girl, I think she was about 18 or so 17, just still in high school. She said, "Daddy, look into this, because all my friends are using this app, this technology." So the father listened to her, looked at it, and then got in touch with the founder and asked him if he could use some money. This was a tech guy, a venture capitalist as well. And he put in a modest amount of money, maybe a couple $1 million, modest in a sense. It wasn't a big investment for him. And he ultimately got back over $1 billion. So when I say wives give it...
by Facebook, right? So which is now Meta. So
yeah. So, the best ideas come from women. Spend almost all of our money. We break our necks out.
That segment, the non-consumer. The
Right.
teenage girl, young
Right.
women are the number one consumers.
Right. That's why the women outlive the men by 7 years in this country, because the men work their butts off, and the women spend the money. But apparently they're working off. For me, going shopping with my wife was much more taxing than any kind of work I had to do. I don't know. They got miraculous legs and miraculous patience, because I'd go shopping with my wife. After an hour, I'm totally wiped out. I could play tennis for 2 hours and not get that tired. And women have, they last forever. Shopping is a good thing. This guy says, I hold my wife's hand. We're almost in love. So they say, why? What does that show really in love? He says, no, but it prevents her from shopping. So
it really speaks to what you said, that ultimately you can bet on a jockey, and they could be developing a technology, but if there's not a market for it, or they're in the wrong market, it doesn't work. So it's about knowing the consumer, knowing that whatever technology you're in or whatever company you're looking at, ultimately, will it be adopted?
There's a famous story like that. The company developed a pet food for dogs, and they did an advertising campaign. And the advertising agency, this is the most phenomenal response we ever got from an advertisement that we prepared. And they said, so why isn't the product selling? If the advertisement is that great. He says, well, the advertising everybody loves, but the dogs don't like the food. So it's more than just.
It's knowing ultimately, and that's across whether it's a consumer, whether you're developing, you love healthcare, you've invested probably billions of dollars, raising and investing in healthcare, and ultimately, if you're developing, whether it's a medical device, it's a drug, is there a need for it? Is there a patient need for it? And a lot of times, what ends up happening is a hospital system may love it, but the patients don't, and you have to really involve the consumer, the patient, in developing any technology.
Overwhelmingly, I funded healthcare companies and medical companies and so forth, because my goal always was to see if I could help cure the terrible diseases that affect all our families and our own selves. So if I could have cured cancer or heart disease or Parkinson's or Alzheimer's, particularly cancer, because I've seen so many people that die from it and suffer so much along the way.
Well, you always say if you live long enough, you're going to die from cancer, right?
Yeah. So anyway, even if initially it's just allowed to treat people in the last stages of cancer. So I forget what they call it,
compassionate use.
Yeah, compassionate, whatever, relief, compassionate.
Yeah. So, but it's a private company. It's still early, right?
It's right up your alley. It's a total venture capital, because it has no approved product. They expect to get approved quickly based on what they've demonstrated so far, and based on the reputation of the guy who's developed it. He's been put up for several times Nobel Prize. He's won every medical prize in the universe practically, and he's got about 37 patents in the field, and he's called the founder or the developer of molecular biology. So he's a genius, and he's also happens to be the chancellor of the Baylor University Medical School, and he's got a bunch of world-class, eminent scientists, medical scientists working with him. So it gives me a lot of confidence that, it's never an absolute sure, but if I knew somebody who was in the last stages of cancer, I'd urge them to. I don't know if it's approved yet to give it to humans, but I would definitely try to smuggle it to them to get them healthy, because it's really. I've never been so excited about any company in all my life.
So the jockey you like, the technology you like. So now from an investment standpoint, because a lot of times you love the entrepreneur, you can love the product, but is it a good investment? Right. That's the question. Is it the right stage?
Larry, would you give me the letter I wrote to James? Because
so what tells you that it's the right investment?
Because the fellow who's the lead, Steve Gorlin, who started a number of companies that I took public, 7 or 8 companies I took public for him, none of which I gave him more than 7, 8, the most $10 million initially. And 5 of the 8 are billion-dollar companies, and one of them recently, a few years ago, sold for $14.2 billion. First, Sanofi offered a French company offered $9.2 billion, and then Pfizer came along and offered 14, but they didn't bid, just a little higher. They offered $14.2 billion.
Okay, so this is the best we've ever done, except technology is completely letting us
You don't want
down.
to continue it?
No. The technology apparently is not transmitting right now.
So one second, why do you need to? Ellie, are you still here?
Well,
How long are you
is
here
this on
for?
there?
We've
Go.
well,
Go ahead.
Well, my answer is tomorrow. I told him. I gave him. He has up until my flight because he just wanted.
You've been having some technical difficulty, but you're on now, so you could continue.
we're not on.
What was I saying?
Everybody has technical difficulties.
Oh,
It's how you deal with them, right?
Right now, you are talking about your the great potential in this company, and you just got the letter that you wrote for to somebody
Yeah,
about Borland's.
again, there's multiple
Oh, no, I
facets to an
remember
investment.
that.
So why
No,
does it?
I
Why is it?
remember you asked me, because the founder, this guy who did all these successful public offerings in the medical field, has gotten a license from Baylor University from the founder of this, for the inventor of this, the creator, the discoverer of this miraculous, seemingly miraculous treatment. It has met with a fellow doctor who was head of the American Cancer Society for many years, and was also with the National Institute of Health, the government agency that funds medical research. And this guy, when he was shown and spoke to the inventor, said he's never seen anything like it. I wrote a letter to my nephew, who also does the same thing you do.
He's unbelievable.
Number 2.
Okay, so we're back
Right.
with Morty Davis and grandson Eli Renov. And
Morty
talking about
Davis's grandson is enough. I'm very happy to just be that.
and talking about early investment in
Yeah, do you
promising
think you could like maybe
startups.
pass it?
We're on live. So we were just talking about your a project that you have that you're very excited about. Anything else you want to say about that?
They had some development the last couple of days they found so exciting that this Dr. Broder, who was head of the American Cancer Society for many years and a leader in the NIH, all my loved ones, for you and Len and everybody, because every one of us either is going to be not burdened, but
Challenged.
ravaged by cancer, and worse than
So there it says, if you live long enough, unfortunately, you're going to get.
Yeah, but even worse than the cancer, the news that you got cancer is the chemotherapy and the side effects, the treatment over the months and sometimes years that I've seen that, and I couldn't watch, I couldn't tolerate observing it. So hopefully this is a major breakthrough for medicine and for all human beings, all humanity.
So how do you balance wanting to make a great investment, but at the same time wanting to do something impactful? So I go back to my question. Let's say this deal was what are you looking for in a deal when it comes to valuation or potential dilution after? How are you thinking about?
I don't think he could ever value it enough at this juncture, but in my view, it could be the biggest and most profitable if he chooses to go that way. Pharmaceutical biotech company in the history of medicine.
God willing, like I said, I think I just hope that the data does continue, and that's what's so interesting about biotech. It has to be a preclinical or early stage, and sometimes we get that question of, well, what are your revenues? I said, I don't really care about revenues. It's a very different mentality. I don't want to be valued on my multiple on revenues. I want to be looked
Not
at.
only that, by the time it has revenues,
It'll be long sold. You can't invest in it,
no,
right?
You can't afford to invest. Maybe it'll be public and you can invest in it, but it'll be so expensive. The reason you get in at a very reasonable rate is because there's implicit risk in everything.
So if this is private now and you invest in it, let's fast forward and you said, okay, God willing, it goes public or gets taken out, but let's say it goes public. So then I'm sitting here with a holding equity in a public stock. What am I doing now at that point? How am I thinking about holding it, selling it, keeping it? What do I want to do?
Well, you should understand that better than anyone because you do venture capital. You do, and you don't know what it's worth, and you don't know what price it's going to be available at. But some of the guys that got stock early on as employees want to liquidate, they make their stock available, and it's not registered with the SEC or anything, so it's not as safe in terms of the assurances you get that it's totally legitimate because you can make claims and everything that may not necessarily work.
So one of the things, the point, right? It's traditionally
it's a way to make a lot of money if it works out.
Right. So traditionally, it's very hard, and it's broker to broker, and it's a tedious manual process. One of the things that we've discussed is launching an ATS, which is an alternative trading system, which allows you to have price discovery and transparency, and can create a marketplace in private companies, like say private companies, and ultimately that could be a liquidity provider. That's what we want to be doing for families.
Yes. You're doing that. You're providing a secondary market or a pre-public market, so they have some liquidity, but they don't have research reports as you would for a listed company, or you can't see the volume, you can't see what other people are doing.
No, I agree with you. You certainly have to be very diligent at that stage because they don't have.
So what would be the main metrics you'd be looking for?
We're generally, when it comes to companies like that, we are looking at year over year growth. We're looking at their ARR. We're seeing, did they hit there still are projections, and at that point they're reporting to a board, and there is a budget. Did they come in under? Did they come in over? And ultimately, is there a market for it? And does it matter whether or not we're in a recession? Does it matter, whether or not the company is economy is booming? Will there be a need for this technology? Would it survive in a different? And what would this look like in a different market?
And what makes some of them compelling, most of them compelling, where the people who line up to buy in early, is the upside potential, the promise. You could buy lots of great companies on the New York Stock Exchange or on the NASDAQ, but you're paying for what you see, what's already been developed. Here, you're betting on a long shot, but if it comes through, it's much bigger than it could change your life. So that's what some people like.
So
you shouldn't if you can't afford to lose the money, you shouldn't participate in that market. But if you
I agree with him there.
But you could take part of your money if you have enough money, take some part of it and say, I'm going to put 10% or 20%. So I still have the rest in
So how much do you?
Your IRR on a yearly basis, right? That's what I'm trying
to do. For people who may not
So generally, a lot of, if you're looking at real estate, you would say, okay, what is the percentage or the interest that I'm getting every year? What's my return on a yearly basis? For me, I'm looking at and saying, if you give us X amount of dollars, what is the multiple that I can give back? Not necessarily always a function of time, let's say, but that's my goal. That this year may be a zero, next year may be a zero, but we're playing a long-term venture game that God willing could give 100,000 X return.
All kind of strategies. That's why there's so many advisors. My father-in-law once told me that he had a friend, this goes back many, many years, that only buys apartment houses in very depressed areas. So he put in Harlem, he put in the Lower East Side when it was totally nothing. And so my father-in-law asked him, why do you do that? It's dangerous for you even to go to pay rent, to collect rent. People get stabbed going up to Harlem to collect their rent. So he says, one thing I know, there'll always be poor people, and my apartments will always be filled. I won't have vacancies. So that was his theme. It turns out that this wasn't his intention, but it turned out the outcome was enormously bigger than he anticipated, because Harlem became upgraded and changed. And when Clinton got rejected to get into any building in Manhattan because they felt after his presidency it was controversial, there'll be too many cops and too many this. So he took a place in the middle of Harlem.
125th Street.
Yeah,
I remember that.
So when I look at real estate,
also on the Lower East Side, people were afraid to go to the Lower East Side because there were so many druggies and so many homeless there. And now it's had a revival that's, you pay more for one apartment than you used to pay for a square block.
sounds like Jerusalem.
Do you do real estate in Israel as well?
No, I try. So interesting. So when my grandfather talks about real estate and says there are always going to be people that need real estate, so I think about it and I go to what are the technologies and what are businesses that support that, right? So we're going back to the secondaries. So we're doing a secondary now where it's short-term, long-term property management. You are always going to need that, and if you can make those tools better, and so you said, what do we look for? So here there's a priced round by a tier one investor, and they're early investors that want to exit here, or that need to exit a lot of times because they could have, a lot of these are funds and they may be winding down. So they're in a position where they need to return to their LPs, and we're opportunistic and have the opportunity to come in at a discount to a priced round in, you could call it real estate, but it's a prop tech company, and that's what we look for.
LPs are limited partnerships, in case people don't realize.
And they're, so that's the thing, the limited partners, and that's where we sort of differ, and where family offices can differ. Or my grandfather could say, you know what, we don't have a specific mandate, because a fund may have a timeline. A fund may have a timeline, may need to wind down and need a return. And we look at it and say, we don't have a mandate. So we can be, go into an energy company. My grandfather has done for the energy, and then we can go into a biotech company and a medical device company, and impactful companies that can give outsized returns, because we don't necessarily follow something. And I think that ultimately creates a lot of value for our investors and our families and our partners.
Okay, I guess we exhausted our time. I'm sorry for the technological problems. You can see it during the week, and we'll touch it up.
Absolutely.
You can see it anytime you want. Okay. That was my great producer, Anna Maria, and the introduction is done by my other great producer, Leonard Katz. Thank you for tuning in, and have a great week. Bye.
Bye.
God bless you all.